Hi, didn't see you there. I wanted to talk to you guys a bit today about gold and some other asset classes. This year, gold's had a pretty historic run up, as you may have been hearing, and I've been fielding some questions about whether or not we should increase allocations to it and other precious metals potentially as well, whether that's advisable. And I also decided that along with this description or discussion about gold, we might as well throw Bitcoin in there because recently it has been described as the digital gold, if you will. So, first off, pros and cons. We always want to talk about each asset class, what's good about them, what's maybe not so good about them. So first off, gold. Gold generally has what's a lower correlation to stocks. And what does that mean? That means when stocks are going up, gold isn't necessarily going up, and when stocks are going down, gold is not necessarily going down either. So things have a high correlation. They tend to move in the same way. Things have a low or an opposite correlation. They tend to move up or down less or even the opposite. Gold is also described as a safe haven asset class. We all know gold's been around for a long time. You can use it as money, especially if you hold it physically. Not as easy in today's digital world, of course. And there's no what's called counterparty risk because it is not a company. Right, you're not invested in a share of a company or anything like that. And certainly, with companies, there is the risk of them going out of business. Gold, you might lose your coin, but it doesn't necessarily go anywhere other than maybe under your couch. The cons of gold, right? So what's not so good about gold? It doesn't yield anything, right? My little fake gold coin here never multiplies and becomes more gold coins, right? Unfortunately, so there's no dividend. There's no utility necessarily for gold either. Even though it is a great conductor, it's generally not used for that because of its scarcity. There's no good or service that is tied to gold either, like a company, right? Companies provide goods and services. So if you're going to want to purchase gold, hold gold, especially physically, there are definitely commission costs associated with doing that as well. And of course, you have to find somewhere to store it, hopefully securely. If not, give me your address, and I know a guy. We'll see. And it's not immune from volatility either. It certainly does have volatility, which we'll talk about in a little bit more detail here. And it's not as immediately accessible to change it from either physical or digital gold into actual money that you can spend. So what about Bitcoin or other cryptos? Biggest con or biggest pro, it's upside potential, right? It certainly has seen a lot of upside potential or an upside return, which again we'll get into in a little bit later. Show you some of the returns on some of these asset classes. And we obviously don't know what the potential for it is. It's still a newer asset, so there's a lot of speculation out there. But if it becomes or continues to become more adopted out there, the potential upside is certainly there, even more than has been there already. It's generally safe. I mean, we have heard some stories out there of your digital wallet maybe getting lost or stolen, but if you are buying cryptocurrency on an approved exchange, you do have the blockchain, which is very safe and secure, and actually part of the reason why Bitcoin actually exists is because of the security behind, known as the blockchain. We can get into that a little bit more and if you have questions about that, but generally it is very safe on average, and it certainly trades all around the world and is very liquid, just like stocks would be as well. Cons, lots of volatility, right? We'll talk a little bit more about that, but certainly declines of over 50% are fairly common with regards to to cryptocurrencies. it can be stolen. As I said before, we don't see as much of that nowadays as we used to when people were kind of holding their bitcoins on like a digital wallet, right? Some kind of like a USB type of a device, right? So that doesn't happen, as much nowadays. The future of it is certainly unknown, and it's pretty interesting. I went on to the Coinbase website. There are over 19,000 different cryptocurrencies out there today. Bitcoin is obviously the largest and the most well-known. $2.1 trillion worth of Bitcoins are out there, and all the way down to one called Zero, ZYRO, which has a total value of about $607,000, and then 19,000 different currencies in between that very high and very low number of cryptos that are cryptocurrencies that are out there today, and so you do see that the correlation to stocks is generally higher with cryptocurrencies than it is with gold. So performance, what have we seen with regards to the performance of these couple of different asset classes? Gold obviously has had a really great run this year, other than a most recent decline of about 5%. It's up over 50%, so far this year. Bitcoin, no slouch at about 18, and the S&P 500, our good old market barometer, just shy of 17% as I'm recording this video today. So what about longer term? Every asset class certainly does have volatility associated with it, with all the news surrounding gold and the hype, and it's the safe haven, and I've been hearing these things for decades. You would assume that gold, is maybe a steady eddy, if you will, and doesn't decline or doesn't decline by very much. Unfortunately, gold has suffered substantial declines, and I just went back to 2006, 20 years into the past here. So 2006, 22% decline for gold. 2008, when we were in the midst of the financial crisis, the Great Recession, you would have thought that gold did well back then. No, declined almost 30%. From 2011 to 2015, had a bear market, if you will, over 44%. And then also during the pandemic, we saw an over 15% decline correlated to pretty much everything back then. And even more recently, from 2020 to 2022, a longer term decline of about 21%. Sounds similar to the volatility of stocks. If I were just mentioning those kinds of volatility times and figures, you would say, oh, well, that's the stock market. No, that was actually gold. Of course, not that stocks don't have volatility. We all know that story very well. I'm not going to spend any time on that today. Since Bitcoin hasn't been around very long, going back to about mid-2010 is when they actually started kind of pricing it, and it was available on exchanges. We don't have decades of data, but we certainly do have volatility, and the volatility has been much, much higher. Looking back, there have been 7 periods where the price has declined anywhere between 50 and 90%. And so that is certainly why Bitcoin gets this description of being a highly volatile asset, right? Both on the downside and on the upside as well, right? So what about the upside? Let's look at all 3 of these asset classes. Since the inception of Bitcoin, so if we're trying to compare apples to apples here, which would be that mid-2010 time frame, gold and the S&P and Bitcoin, gold has had an average annualized return of about 8.5%, S&P 500 12.6%, and Bitcoin a staggering 155% average annual return. So obviously Bitcoin is the clear winner there. I would speculate that not many people have held Bitcoin for that long of a period of time, especially given its newness and given its volatility and the deep drawdowns that we've seen, plus most of the time anything that's very new, kind of the wild west of investing, doesn't get a whole lot of that early adoption. So there you have it. Each asset class unique in its own way. held for very different reasons, but similarities in that they all do have volatility. They all do have positive returns over time. Obviously, differences in how those actually work and what those periods have looked like as well. I will say, of course, that the S&P 500 is the only one of those three asset classes or stocks in general that you can get diversification. Right, gold is one asset and Bitcoin is one asset. The S&P 500 is 500 different stocks, the Fortune 500 companies that we all kind of know and have heard about. So, and of course they do provide actual tangible goods and services as well. So, there actually is something, backing up those stocks and the prices behind those stocks. So, if you'd like to know more, you want to talk through it, we obviously do have the ability to hold all of these asset classes. So if you want to talk in more detail, I'd be happy to. And don't worry, this is not an actual gold coin. It's just a commemorative one from one of our charities that we donate to at St. Jude. So don't come looking for my vault of gold. I don't have one. Until next time, thank you very much.